Hey everyone, it's Minasoma here. Today is 24th of May 2025, and we're going to look at the current conditions of the market. This week we had the Fear and Greed Index at a value of 64. Past week we had at a value of 70, meaning that this week we see a less greedy sentiment, which obviously correspond with the downfalls and the falls we had this week on the stock market. We can see that over the week performance, majority of the stock has been trending lower, and we can see that real estate, technology, consumer, cyclical, energy has been the worst performing sectors this week. This week, we can see that the Nasdaq, the SP 500, and the Dow Jones are still in the negative area since the beginning of the year. And in comparison, the Eurostock 50 is performing better, still at a 9.39% up since the beginning of the year, meaning that the American market has been successfully leading into all-time highs. We are in a short-term correction at the moment with potential upside in the future. If we observe the comparison between the VIX and the SP 500, we can see that this week, preceding this little fall we had over the last end of the week, we have an increase in volatility, an area I am personally comfortable and I very much like the volatility to be in is within the 16 to 17 area, even lower, which is closer to the one in 25th of March. But unfortunately, as soon as we start seeing a spike in volatility, then the market do the opposite direction. As previously mentioned, every single time where the volatility increases, it's a good time to look for buying opportunities. We had the previous one in April. If we go backwards, we have the one in December, then we have the one in August past year, and so on and so forth. So these act as an actual mirror. So when the market goes up, then the volatility trends lower, and then it does exactly the opposite direction. So at the moment, we're in a short-term correction. We'll see later the graphics within the SP 500, but we certainly see an increase in volatility, which obviously will need to adjust our systems accordingly. Talking about systems, we haven't got the entry signal in any of the Dow Jones, SP 500, or Nasdaq. We got the exit position, as previously mentioned in previous videos, at the beginning of this year or at the end of the previous year. And then we'll have the entry once we have the 200 moving average being crossed below the 50 moving average. That will be basically the buying entry, and then we will take a position when those conditions are met. I do have the system with a bit more parameters, but the main idea is that as soon as you see the cross between the 200 against the 50 moving average, then the entry signal starts, and then you will hold up to the certain criteria is met. Bringing the comparison of the oil and the Dow Jones Industrial Average, both in logarithmic scale, and then the oil has been offsetted forward in years, which is McClellan comparator. We can see that the magnitude when there is a drop within the oil usually correspond with a drop in the market 10 years later. And then we had this situation at the beginning of this year where the market trends lower, and then we basically create a bottom which corresponds similarly as the bottom we just saw on the market a few weeks ago. What will means at the moment? Well, if we look forward the history, we might have even further movement to go down in the future, but we'll need to see. Moving into the performance of the indexes, the Dow Jones Industrial Average, we already had a double top activated that was achieved and a second Fibonacci retracement that was achieved. Now we have a bounce into the 200 moving average, and now the price couldn't go beyond that, and currently we are on correction phase. How long will be the correction? Well, it will heavily depend on technical level. The positive aspect is that we break through the 61.8, so we went beyond that point, the price breakthrough above. So following technical analysis will be closer to 45,129 or the previous maximums than going to minimum. Obviously, we don't know because we need to remain cautious, and uncertainty is something that you will always find within the market. But on a positive level, there is high probabilities to go to all-time highs. The price just naturally bounced in the 200 moving average, and now we are trying to find a consolidation period where potentially could initiate another movement up, but we will need to see. We can also study this as a first initial movement up with a potential support levels on the different Fibonacci levels. And then if the price is within this area, which also could be quite common, within this area find support, then initiate another movement towards the second Fibonacci wave. Again, nothing of this has been activated yet, or we can not see any of those structures at the moment. All we can see is that we have a rejection in the 200 moving average area, and the price is currently on correction phase. Moving into the next one, the Russell 2000, probably the one of the worst performers in terms of indexes when comparing with the Dow Jones, SP 500, and then the Nasdaq. Exactly same situation. This one even hasn't reached the 200 moving average and already correcting phase. The SP 500 quite strong comparing with the previous two. So if we capture a Fibonacci retracement, we have broke through the 61.8 area. We are finding a nice support on the 200 moving average. We break the 200 moving average with a beautiful gap. Now we're finding this area as a resistance and with high potential to go to all-time highs at 6,147. Moving into the latest one, to the Nasdaq, we have a similar structure, potentially even the strongest one among all the indexes in America. We break through the 61.8. So by technical analysis, once more, again, going to the 22,222, quite funny name, funny all-time high. Then we break through the 200 moving average with a beautiful gap, and now the price is trying to stabilize with now the 200 moving average slowly turning from negative to potentially positive. Against or among all the indexes in America, Nasdaq by far leading the upside movement. And why is that? Well, basically because the Nasdaq has been performing better than the other industry sector, just simply because it's technology, and technology means grab whatever the industry is interested at the moment that will potentially make people's life easier. And that's the main reason why the indexes, especially on the technology, has been performing better than the other ones. Then we have the SP 500 and then the Dow Jones. Moving into stocks, we've got Apple currently correcting on the 50% Fibonacci retracement of all this movement. We had a couple things I personally don't like. I don't like this gap that has been closed. I'm going to remove the lines because it might be a bit confusing, but we basically had this gap that hasn't been closed yet. The price tried to close it, but it didn't successfully, and then we left another little gap here. So at the moment, Apple has few resistance on the way. So we have first, obviously, this resistance, then so we have this resistance, we have the 200 moving average, and then we have this area and this area. In the long term, very strong stock, has performed extremely well across the years, but on the short term, on correction phase. What do we have here from the technical level? Is there any pattern activated? Well, on a bullish side, nothing. And we can consider this as a first Fibonacci retracement upside. And now we're in a normal correction phase. So we are between the 38 and the 50%, and we'll see if the price will need to correct slightly lower. Very important that we don't lose the 61.8, otherwise we will have likely a potential correction towards the previous minimum. But again, nothing of that has been activated at the moment. It's just only a waiting signal, and the first big resistance area will be the one on the 214, and then we have the 200 moving average. Amazon, similarly, we have a beautiful gap breaking the 200 moving average, and we are at the moment in a way that we don't know if it's going to go through or not. We've got Google. Google is potentially one that is creating a beautiful head and shoulders inverted. So we have the left shoulder, we have the head, and then the right shoulder. It's very important that we break through the previous highs at 176.77. If we break through those, then it will be potential or high probability to go to all-time highs. Going to Meta, which has activated a double bottom structure, so two minimums within the same area. If we project this structure up, we will see that we have an objective around the 700 moving average area, and then the first support area is going to be the 200 moving average. Going into Microsoft, potentially one of the strongest one among the group. We've got a beautiful gap breaking the 200 moving average. That's always a positive signal with high volume on that particular day. And then we are now hitting the all-time highs or close to the all-time highs. So I don't discard a correction because obviously the pricing within only a few days went up about 34%. So a correction is completely normal after all of this rally. And as long as we don't lose the 61.8%, it just seems a normal healthy correction to take some breath before it continues going to another all-time highs. Moving into NVIDIA, so NVIDIA have a downtrending channel. It break through the 200 moving average. It activated this pattern, and we have an objective towards 148, which is exactly on the same area as the previous few maximums. And then the last one among everything is Tesla. Tesla has activated a symmetrical triangle. It was breakthrough on the 25th of April. We had an objective towards 260. We haven't reached that point yet. We are a few dollars away, but I don't discard to do this first Fibonacci retracement area and then another one. And at the moment, the first support area is going to be the 200 moving average, which is the 311. Well, that's pretty much for the week. I hope you like, you subscribe, and see you until the next time. Bye bye.